Hi, this is Jim Cramer, Portfolio Manager from ActionAlertsPlus.com with Jack Mohr, who's our Research Director. Jack, we added one that you and I have loved for a long time. We cleared some decks and got a stock that I can really just feel like we could buy if it goes down, and own Thermo Fisher, TMO, loved it forever on Mad Money, and it's just got so many levers.
So many, and it's 5 times bigger than the next largest competitor in the space. I mean, that's unbelievable. It's a $50 billion life sciences and tools company. It makes some very sophisticated tools and very sophisticated instruments that scientists use. And it's so well diversified, it has so much scale, and they've been able to drive an annual average EPS growth of 17% just consistently over the
with
past.
Great acquisitions,
Exactly.
which they can actually do. I think they can restructure if they want to. There's part of the most recent one, Life, that they don't need. But when I've had them on Mad Money, I was so impressed by the fact that they are the play when you see all these biotechs raise money. They are the play when you read about all the new tests. And they are a machine. And we're going toward, when I look at the way we're headed in the portfolio, try to get some more healthcare, life science that have consistency. You and I look at McKesson, we look at Cardinal, but TMO at these levels, so right.
It's so compelling. And I think that what investors in the market is not pricing in the long-term potential for this because they're looking at the short term, they're looking at the FX headwinds that it already has kind of cleared the table and said, look, it's going to be a big hit this year. But when you look at out in the out years, 2, 3, 4 years out, and you start valuing it on that, I mean, it's so undervalued. And I think it can go much higher.
Right, when I had them on Mad Money last, they were saying, look, the near term, because of the acquisition, you're not going to see it come through, but business is strong, but you're not going to see it come through in the numbers. Well, we're now past the near term, and I think you're going to start seeing good numbers. One of the things I really like about TMO, besides the scale, is that this is a company that when there is any deal, they're in on it. And we see from activists, we see from value, which I don't really care for, but we need acquisitions in healthcare. Those work.
Right.
That's why we like Halyard. They make these acquisitions, they bulk up. You need to be in the companies that are perceived as being the leaders, both from organic growth and from acquisition. That's what's done well for us, whether it be, look, with Walgreens, it's done really well. I think that you've got to be in the companies that have the momentum, worldwide, doing acquisitions, good balance sheet, and that's what's going higher.
Yeah, head of the curve.
Yeah, terrific. Thank you so much, Jeff.
Thanks.